Hello everyone, this is Farah and thank you for joining. I just need to double check if you can hear me properly. Please do let me know on the chat before we step into the bigger picture. And maybe we need to just talk quickly about yesterday because it matters for the context. But I just need to double check if you can hear me properly so we can start the session. I think all is well on my end. So obviously we've noticed with this earnings season, markets were actually extending higher, continuing that earning driven momentum. But then yesterday the attack hit that immediately interrupted the move. We didn't see a full reversal yet. Um, but enough to inject what we think is a hesitation at the moment back into the markets. Obviously, oil reacted, but this is not only an oil story. We have yields pushing higher, we have reaction, clear reaction on the US dollar, on gold as well, and obviously the stock market. So the macro events are still going strong. We have today some data about the services. We really care about that. Services are usually the sectors that get hit or react quicker than other industries. So that's something important to highlight, as well as jolts, which would give us an insight on how healthy the US job market is. We also have strong earnings coming in today from AMD and from Visor. So this session um, markets were moving higher, but now we're being forced to reassess, and this is why it's important to tune in and have a look together on how the markets are reacting. So, um, I think there's an issue. Um, Maybe I can't see you chatting or writing any comment on the chat. If you are, maybe it's delayed a little bit. But we'll have a look on different indices and see different stories, whether it's on US 500, or S&P, or on Dow Jones, or on Nasdaq, and how they're each is acting or reacting differently. We'll start with S&P 500, and we need to remember that a large majority of companies have already come out beating expectations, and this is why we can see this somehow V recovery. Just move the camera here a little bit so I can check the chart clearly. So as we can see, we have this V-shaped recovery. Some of the largest name already came out with very big surprises, even exceeding expectations by 50, 60, and 90%, especially when we're talking or highlighting AI related trades and AI related names. We are well above what was priced in into the season. And that's what allowed the markets to absorb everything else we've seen. Whether it's volatility or geopolitical tensions, equities have managed to recover. Not only to recover, it's not only a V-shaped recovery, but we have this sustained momentum that push prices higher to levels that we didn't even see before the geopolitical escalation. And that's a very important, maybe, levels to highlight technically. So we've seen the sideways move since the beginning of the year. It was capped around 7,000. Everybody was maybe trying to decide whether we can move beyond these levels. Obviously, the geopolitical tension with Iran dropped and prices almost reached 6,300. And then we had this V-shaped recovery, a very strong momentum. Technically, though, there's a couple of signals we need to take into consideration. So this momentum was actually broken, even though we kept on, the momentum was still higher. We broke above the 7,200, which was kind of a ceiling for the prices. And now we can see this momentum, this uptrend, the lower level of it or the lower boundary of it is turning from support to a resistance. And we can see, as always, markets tend to react and retest major levels. So when we saw this break below, markets tried to retest it. And maybe we can zoom into the 4 hours chart. It can show us like a clearer move. And you can notice whenever we break a major level, markets do that with a strong momentum and they usually tend to retest it. So the 7,200 acts now as a major support, while this move higher can be capped or retested at least if it spikes back and retests the lower boundary of the previous uptrend. So technically we are near all times high, but we need to take this into consideration, especially when we are looking into the S&P 500. Still, we need to take into consideration this is a very concentrated trade or recovery. Small group of names. Obviously, the large cap tax, it's what's taking space. We can see it clearer on S&P, on Nasdaq as well, but obviously it's also concentrated when it comes to S&P 500 or what we refer to as the Magnificent Seven. So if we can have a look on US tech, you can see that we have the same move. You know, we've been on a sideways move even uh, late 2025 and 2026. It was capped around 26,600. Then we had this major drop, a V recovery with a straight, clear momentum, but yet we broke below this momentum or this uptrend. We retested the lower boundary of it, and now it is acting as major resistance around 27,800. We are still seeing this ceiling. Maybe it's clearer for Nasdaq than S&P 500, and this is why we are moving, as you can see, to Fibonacci extension. Whenever we're seeing prices moving in uncharted territories, level that we've never seen before, it's really hard to decide where is our next resistance, and this is why Fibonacci is super important in situations like that. So how can we add Fibonacci? Expansion. Usually it's also a tool to check the retracement, but when it comes to prices, as we said, trading in uncharted territories, it would be a better tool to use. So obviously we can pick from the dip of April 2025, then the all-time high of late October, and then our last point would be the lowest level or the dip of the last correction wave. So we click, we drag it a bit longer just to give us levels clearer on the chart, and we can see how these levels are being respected clearly by the market. So the expansion of 50% is now being tested as the major resistance around 27,750 to 27,800. Obviously, if we can manage to peak above that level, then maybe we can uh, keep an eye on the next resistance, which would be the golden ratio of Fibonacci around 61.8, which would be around 28,900. It's also supported by the lower boundary of the uptrend. So when we discuss a very concentrated trade, especially when it comes to large tech names, Apple, Microsoft, Alphabet, Amazon, Meta, Nvidia, Tesla, they all came better than expected. Still, some of them, even with earnings beating expectations, we saw a bit of a drop post earnings. Why would we see this? It's been so long, maybe post COVID till today. Earnings are always expected to beat expectations, and apparently that's the new normal, and that's what the markets are expecting from these big names. So even if markets came as expected or slightly better than expected, at this point, even if it's 50% better than expected, sometimes the move can be muted. First, because it's kind of priced in. Second point, and the most important, we have the strong move in markets where we buy the rumors, We buy the expectations, we buy the maybe we enter the market earlier and before earnings come out because we are expecting markets to beat expectations. And then when the earnings come out as expected, we sell the news. And this is the trade known as buying rumors, selling the news. Especially for beginners, this is something super fundamental to take into consideration. And this is why sometimes, even if we expect, for example, not only on stocks and indices, but sometimes even if the news comes as expected, we might see markets moving in the wrong direction because it was widely expected. That's something to take into consideration. And um, short-term traders already placed their bets before the news. So for those who are maybe trying to avoid this concentrated trades, avoid big names or the volatility that it brings with it, maybe it's also important for you to check Wall Street, our Dow Jones index, which tracks the Dow Jones index, and we can notice how yes, there is a clear V-shaped recovery, but it did not break or bring us to a new all-time high. 50K is still the ceiling. We're still seeing a sideways move after trying a little bit or twice to test this level. We've been above that level before. Why Wall Street is acting differently than S&P 500 and Nasdaq? Because this index is more on the defensive side, more exposed to financials, to defense stocks to healthcare. So it doesn't have this momentum or this, AI related trades that we've been highlighting and discussing for, since the beginning of the earnings season. So the V-shaped recovery is also real when it comes to Dow Jones, but we did not see new all-time high. It is less volatile, less, big moves, but this is what an index exposed to less maybe volatility and more defense stocks should give us, obviously. So 50K is obviously still our main ceiling resistance. We're seeing a sideways move on the below. We had a spike towards 48,500. We believe the sideways move is probably the case for Dow Jones moving forward as long as earnings come kind of better than expected. But for those who are into volatility, they maybe want to have um, more exposure to what we call AI trade. Then we can also have a look and highlight for you an index that we also have on IG platform, which is the Magnificent Seven Index. It tracks the seven big names, Microsoft, Alphabet, Amazon, Meta, etc. And it would be also interesting for those who are maybe focusing more on AI related trades, how spendings on AI is affecting the price. Obviously, spending is accelerating. We've seen this across all major big tech names. Expectations also were high, and so far earnings are actually validating this narrative. And what's interesting when we focus more on only the Magnificent Seven index is that we've seen the ceiling breaking and prices are now trading above it. Even when it comes to end of last year, when we saw prices peaking to its all-time high around October, this level is being retested again, and there's kind of small or positive signs we're seeing. We broke above it. Now we're trying to maybe test it again as a support, but we're still a little bit above it. We spiked to new all-time high. My worries are that RSI is elevated. Maybe it's a bit too concentrated. Given the news, any escalation might also unfold quickly, and we might see the major impact on Magnificent Seven index, obviously, because it's the most concentrated when it comes to, big tech names. Nasdaq would follow, S&P then comes next, and Dow Jones obviously would be the least affected by AI related stories. Um, so this is where I think the setup can be a little bit more fragile. especially when performance depends on small number of names. So the margin of error, especially with this momentum that ignored the geopolitical tension, ignored higher oil prices for a while. So the margin for error is obviously way smaller at the moment. um, Maybe earnings on its own and strong earnings on its own is no longer the main story. We need to see if oil prices and higher oil prices will be the major news moving forward. Um, so these are, I think we have, I apologize for that, but I think we do have an issue on our chat, but hopefully I can see them once the live is over. And whoever has any question, please leave it, and we'll make sure to come back to you, whether it's me or someone from the support team. We'll make sure to um, answer you as soon as possible. So now we've done with the stock markets. It's only normal to have a look into commodities, oil and gold, and maybe we can have a look at Brent. I think Brent can be more of an interesting story than the US crude oil. Brent is more affected. It's the European benchmark. The US crude oil is more, the US benchmark, US, whether it's the supply side or the demand side, is kind of a bit away or a bit less affected by what's happening in this region. Brent is more affected. And obviously, after yesterday's attack, we've seen a full V-shaped recovery. So yesterday I was focusing on this chart. We had this V-shaped recovery. This momentum is clear. We broke below it yesterday, and it was giving us a bit of a bearish signal. But then with the attack happening, we see prices trading back above it. And as you can see, and maybe if we zoom in to the 1 hour chart, you can see how these technical levels are being respected clearly by the market. So now, after the push higher, after trading still back above this uptrend, prices dropped, but it respected the support of the lower boundary, and now we're trading above it. Obviously, ceiling is around 114. The levels that um, the highest levels we saw since the escalation, and support is the lower level of the uptrend. We need to see if prices will continue trading above this level. A break below might bring us back to the sideways move where the lower level of it was around 108. Um, Obviously, when we discuss oil story, it's a, it's an inflation story. It's really important to see how long it's going to take, and to maybe impact inflation data, impact earnings, profit margins, consumers, CPI. And usually it takes 3 to 6 months to unfold or to impact consumers. So even if earnings came better than expected, even if markets are in euphoria, especially when it comes to AI related stories, but then we need to remember worries of inflation and stagflation are real. They might just take a bit of, longer time to unfold. And the more oil levels remain elevated, the maybe tools are less supportive to control it. So oil obviously is holding its risk premium. Yields are pushing higher, and this is why we are seeing gold, or questioning if gold is acting as a safe haven, because yesterday the news brought gold to test the lower boundary of the formation that's been in place since maybe end of last year, October last year. And you can notice, like, since late last year till today, whether we're looking at stock market, commodities, it's really important to take this whole 6 month or even more into consideration, technically speaking. So as you can see, obviously, everybody thinks that gold should go up whenever we have an escalation related to geopolitical tension, worries of inflation, etc. It is the case, not it's not like it's super clear or it happens directly. We have a momentum where, or a period where the only clear safe haven is cash, especially in moments of fear related to a spike of oil prices, especially when it comes to countries that import oil. Asian countries, obviously, they're the biggest importers of GCC oil. Prices went up so fast. They had reserves in gold, but now their main issue is having liquidity. It's having US dollar to buy oil that spiked even maybe over 100%. So they need to go to the reserve and maybe sell the easiest or the most liquid asset they have. And this is where gold is being activated actually as a safe haven. They sell it because they need the US dollar to buy the more expensive oil. And yesterday's push higher is translated to a push lower on gold. And this is the link we need to take into consideration on a short term level when it comes to how geopolitical tension and oil prices are affecting gold. It's not always the same link between assets. It really depends on what's driving the move and, who's being affected the most. So, still, it's really important to keep this technical formation into consideration. We have this move, this triangle formation. It's been respected yesterday. So, even though we had this drop, prices or the lower boundary of this formation acted as a clear support and it pushed prices back higher. But as we can see, whenever we have the triangle formation, moves or price moves start to become maybe narrower. And then at some point, we would wait for a catalyst to give us the signal of the next move, whether it's a break above this level. We're seeing break above 4,700 to 4,800 as a bullish signal, yet a drop below 4,500 to 4,400 might give us the bear signal. It's all linked at the moment to fundamentals. Do countries with high exposure to oil volatility and high gold reserve, are they going to be impacted for longer? And will they need to liquidate their gold in order to meet, or to purchase oil on higher prices? So what we need to take into consideration, earnings season is still going strong. We are expecting reports and earnings to keep on beating expectations, but oil prices elevated for longer, it would definitely create volatility. We believe also, as you maybe most of you know about UAE leaving OPEC, it didn't really affect prices. We didn't see pressure on prices because obviously markets are more focused at the moment on what's happening at Hormuz. Maybe UAE leaving OPEC is a midterm to long-term story. So in case we see oil prices elevated for longer, we might see the US dollar supported for longer. We might see some maybe gold under pressure. And I think oil maybe at this moment can be more volatile. OPEC being a bit weaker when it comes to controlling markets would definitely create volatility in all markets that we did not see before. It could be very interesting for short-term traders, but something to keep in mind for long-term holders, whether it's who can maybe benefit from this volatility, who can produce higher on a short term when it comes to um, oil-related stock names. And then we can see gold as a safe haven, but then we need to see if US dollar is more important at this moment and earning season if it can bring back the optimism we saw uh, during this earning season. Just keep in mind that we are in overbought territories, whether it's on US Tech 100, Nasdaq, or S&P 500. Keep that in mind. It seems very possible to see high volatility trades which can be very interesting for short-term traders. We have clear level. Please keep them in mind. We discussed them already, and we might see maybe a momentum of high volatility sideway move, not a drop, not a sell-off, unless we have big escalation happening at Hormuz. And we'll definitely keep on following the markets with you, whether it's on YouTube or on our different channels or even on by email and website. And we maybe what we need to focus on at the moment is to keep our risk management tools close, benefit from this volatility. Keep in mind the links that we discussed, especially as we have more earnings coming out and more macro events that would give us a hint on how the markets can move forward for this month. We'll see you next month, hopefully. Stay safe and see you soon.